How do assessors estimate property tax burden? Imagine trying to figure out how much a house is worth without selling it. That's what assessors do to estimate property taxes. They look at a few key things to come up with a fair number. First, they estimate the market value, which is what the property would sell for in an open market between unrelated people. They use three main methods for this. One is the sales comparison approach, where they compare the property to similar ones that sold recently nearby. For example, if a house with 3 bedrooms sold for $150,000, they look at similar homes to see if their value should be close to that. The second method is the income approach, mainly for rental or commercial properties. Here, assessors estimate how much income the property could generate and use that to find its value. The third method is the cost or replacement approach. They calculate how much it would cost to rebuild the property today, then subtract depreciation to get the current value. Once they have the estimated market value, they may apply exemptions or deductions. For example, homeowners who qualify for a homestead exemption might have a portion of their property value excluded from taxation. Some areas also limit how much the assessed value can increase each year, which helps keep taxes fair and predictable. After adjusting for exemptions, assessors determine the taxable value. Then they multiply that number by the local tax rate, which is usually expressed as a percentage or a millage rate. A millage rate means how many dollars in tax you pay per $1,000 of assessed value. For example, if your taxable value is $100,000 and the tax rate is 1%, your property tax would be $1,000. Assessors reassess properties at different times depending on local rules. Some do it every year, others every few years. Regular reassessments help keep property values aligned with current market conditions. Modern techniques, like data analysis and technology, are used now to improve accuracy and fairness. They help identify properties that might be over or underassessed. Ideally, the ratio of assessed value to actual market value should be similar across properties. But sometimes disparities happen, making some property owners pay more than others for similar homes. If a property owner believes their assessment is too high or too low, they can challenge it. Overall, assessors estimate property tax burden by combining the property's estimated market value, any exemptions, and the local tax rate. This process helps ensure that property taxes are fair and reflected the property's true worth.